Hello and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at ING South Africa. Today's economic calendar, we do have that European Central Bank meeting. That's the financing rate and monetary policy statement, as well as press conference to follow, and that's early afternoon. We aren't expecting any changes in benchmark lending rates there, but we are looking for clues as to the path of monetary policy out of that euro area. We do also have another day of testimony from Fed Chairman Jerome Powell, which we did see move markets quite a bit overnight. Let's look at some charts, starting off with the euro dollar. Now, we've had this downtrend, just marked with that dotted line, which has started to reverse. Previously, we thought maybe this was a bit of a bear flag forming. We did have a bit of a downside breakout and a move lower. It reached a low about 1.0795, but certainly not material and certainly a hard one to trade. Market has since rallied at euro dollar, so euro strength relative to dollar weakness. And we have made a series of higher highs and higher lows, suggesting that that short to medium term trend is now up at this point in time. But in so doing, we have moved into overbought territory as well. So traders looking at trading with that short to medium term trend, which is now considered up, might look at it two ways. One, looking for a breakout to close above that 1.0895. That's before targeting a move to about 1.0930. And if we get through that, then possibly even 110. My preference, though, is not to buy into strength because of that overbought signal, but to look for a bit of a short-term weakness. So wait for a pullback back to about that 1.0850 mark and look for a long entry. Now, of course, we do have that European Central Bank rates announcement later today, so that obviously will be influential short-term on movements on the euro dollar. Looking at cable, now it's still within that broad sideways range-bound trading environment. We're looking at this point as a point of resistance at 1.2680. Obviously, with that dollar weakness from the dovish comments from Jerome Powell overnight, has seen us break above that 1.2680 mark, and it is now targeting me back to range resistance, sitting about 1.2800. Traders who are long into that might consider trading a stop below a one day low. When looking at a daily chart, for me, I prefer to sit and wait this one out and looking for, because it's a sideways environment, looking at longs or shorts depending on where we are. In a range-bound environment, personally, I look for breakouts or reversals of key levels. That midpoint of that range, or slightly above that midpoint, not favorable for me, but certainly that move is in play. So I'd be looking for either a bearish reversal of resistance here, that 1.2800 mark for short entry, or looking for a breakout. So we get a close above there in the absence of a reversal, close above that resistance. I'd wait to see how far that move goes and then wait for that first pullback from that move. So those are a long and short scenario for me, but it is waiting and seeing. But certainly, momentum is up, and we are targeting it to 1.2800 right now. Looking at the dollar yen, now there's an uptrend that has been in place, but we have started to correct. We've seen a bit of a consolidation now. We've seen that breaking down and a nice pullback. Pullback sees next level of support sitting about 147.50. We are starting to look oversold at this point in time on that dollar yen, but we don't catch the proverbial falling piano or sword. That market, we want to see that price just ticking back to suggest, okay, at the end of this pullback and continuation of that longer term uptrend in place. We don't have that yet. So again, that's a sit and waiting out, waiting to see where this price finds support. At first level of support at 147.50 mark, we'd like to see the price just ticking back off that. If we do close below that, we consider a downside breakout and be waiting for a move towards that next level of support, considering about 145.95 if using the lows of the candles. And it'll be a little bit higher, 146.45 odd if you're using the bodies of the candles. In that situation as well, we'd be looking at waiting for a bullish reversal off that area if we don't get one of that 147.50 mark. So for me, not looking for longs at this stage. I mean, not looking for shorts at this stage at the dollar yen, but rather sitting and waiting for a bullish reversal of one of those levels of support. We'd start to change our mind. We start breaking this major low, sitting about 145.95. Moving over to some indices now. Just looking at the NASDAQ 100. Now that uptrend we've talked about many weeks in a row, still firmly in place. This is a situation where we like to buy into pullbacks. We have had a bit of a pullback, and we have found a bit of support at that 17,800 mark. Price is trying to reverse off that level. For me, that reversal would be, we're going to see the green candle closing above the halfway mark of that red candle, just to say we've erased most of those losses. The price has ticked back, and there's some momentum to that tick back. So more or less where that candle is trading right now could confirm a signal like that. So we want to see that, positive close above the halfway mark of this big red-bodied candle, suggesting the end of this very shallow pullback, which it is right now, in which case we'd be targeting a move to that recent high at 18,340. Now, we do have channel resistance here, a longer-term target. It's sitting at 19,000. That's on that US Tech 100 or NASDAQ 100. And in that situation, look at a close below that 17,800 as a stop loss indication. Now, if we do get that move below there, for me, because I still deem that long-term trend to be quite firmly up, this blue line here being that 200-day moving average, a gauge of that longer-term trend, still quite far away from that price. So if this bullish reversal doesn't confirm or it fails, we're waiting for that next level of support, looking for a bullish reversal of that for long entry on the NASDAQ 100. Moving over to Europe. Been quite an aggressive trend as of late on that Germany 40 or the DAX 40. We had projected a little while ago, used those Fibonacci extensions, and the price seems to have stopped at that 61.8 resistance level, or projection rather, at 17,820 odd, and the price is now consolidating in a sideways fashion. Now we are in overbought territory, but we respect that longer term trend. We're not trying to pick tops, and so I think considerations for long entry would be an upside breakout, close above that high, and then we start looking at that next level into new high territory of about 18,180. Preference for me, again, is to see this market move out of overbought territory on a bit of a pullback or even a sideways consolidation. In the event of a pullback, same principle applies. We're looking for that pullback to end, bullish price reversal, and looking for long entry. Not looking for shorts, not looking for picking tops in the market right now. Certainly ones that are showing strong upward trends in place, like that Germany 40. And not dissimilar, we see the France 40 or the CAC 40 sitting in a firm uptrend, consolidating near new highs. Now, I usually see when we have this consolidation, the market there's a reluctance to sell off, shows you some enthusiasm on the buy side. And so I wouldn't be looking at shorting that either, in lieu of that trend as well. Long entry here. Consider on an upside break, close above that very, very small range between 7,900 and 7,975. Looking for a close above that. Then we can start targeting, move towards channel resistance there. And a confluence of that 100% Fibonacci extension or that channel resistance, something about 8,200. That's on the France 40. Now, in the event we get a downside breakout, so close below support there, we're waiting to see where that price settles and looking to go long, not looking at shorting and move lower, but rather sitting on our hands, waiting for weakness to play out, and then looking for a bullish reversal. Now, the one index that does look very different to that is the FTSE 100. Now, in previous weeks, we talked about this bearish reversal off resistance. Now, this is a sideways range-bound price environment. So we're looking at trading between levels. We had a bearish reversal. We've had a move lower. That has stuttered a bit, and we seem to be consolidating a little bit. So I think traders who are short, I consider a time stop on that one, waiting for a next opportunity or better opportunity. But certainly that reversal is still in play, and we do have that move lower, although it's not really much momentum. If you are still backing that reversal, we had that support target there sitting at about 7,560. But you would obviously need to maybe adjust your stop, and I think you'd have a stop maybe now on a close above that 7,690 odd on that. If we get through that 7,560, then we start looking at our lower level, and you probably think about 7,490 odd before that 7,410, because that's where we saw a reversal low last time on that FTSE 100. But we do have that bearish reversal in play. It does seem to have lost a bit of momentum, but it is still there. It is still a valid signal. And again, if we're short there, maybe we consider having a stop loss just tightened up a little bit, about that 7,690 odd level. Moving over to some commodities and looking at Brent crude. Now, another range-bound price environment. This has been conforming quite nicely to the last couple of reversal signals there. We had this bullish reversal of support of this very narrow range we've traded through to that initial range resistance, 83.25, and we actually had a slight break of that and found resistance, which was quite close by there, of 84.20. Now, off that level, just circled green, you can see we have another bearish reversal that is in play now. That bearish reversal suggests a move back towards support. That next level of support sitting at about $80.40 per barrel. Now, traders, if they are short, they might consider having a stop loss either on a close above that 83.25 or 84.20 level, dependent on threshold for risk. Now, gold. Gold has, we talked about this lack of momentum in this move up, and well, that's certainly no longer the case. We've seen a very strong, aggressive move that correlates with comments from Fed Chair Jerome Powell. We've seen this market break into new high territory, almost one-way traffic there. And as we make this new all-time high, we suggest that that sideways range-bound environment, which we've been talking about in previous weeks, is now broken. And for me, I like to buy on first pullback from each new high. So we are overbought, suggesting, well, maybe we're going to consolidate the next little bit, or maybe we could have a pullback. So for me, it'd be looking into buying into any type of weakness from this move up. So the first pullback from this new high, looking at levels of support, probably 2,120 would be the first one for me to consider that. But Fibonacci projections as we move into new high territory give us a longer-term upside target there of 2,180, and through that possibly $2,230 per ounce on spot gold. Now platinum, that level has proven to be true again. Range-bound trading environment on spot platinum. We've had that reversal. We're looking for off that 875. We've hit that initial target there of 915, and we are now trading above that, trading about 917. We still above that. That does put that next level of resistance in play, that next target there of about $940 per barrel. Now, initially on that reversal, you would have considered having a stop loss below that range support there at 875. I think if you're fortunate enough to have caught a move there, might consider having that stop loss close below today's low, sitting about $904, $905 per ounce. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa, and thank you very much for watching.